The US and China have sparred over trade deficits, technology, and now currencies. Washington has officially labeled China a currency manipulator after the yuan fell to its lowest level against the dollar in more than a decade on Monday. The Chinese central bank has defended the yuan's devaluation and denied allegations it uses the currency as a retaliatory tool in the trade war with the US.
The recent depreciation of the yuan exchange rate has been driven and determined by market forces. China has always insisted on not doing competitive devaluation. China has not and will not use the exchange rate as a tool during trade disputes.
The Trump administration's latest action could make it even harder for the two countries to reach a trade truce. The US can either launch a new round of talks with China on the yuan's depreciation, or take its case to the World Trade Organization or the International Monetary Fund. But it also paves the way for new penalties on top of the tariff hikes already imposed on Chinese imports. The depreciation of the yuan on Monday prompted a major sell-off in global equities. In the US alone, more than $700 billion was wiped off the stock market, its worst trading day so far this year. Investors fear an escalation of the currency conflict could further destabilize global growth, putting it at risk of recession.
The currency war is the natural consequence of a trade war. With a manipulated currency devaluation, China is trying to keep the effects from the tariffs to a minimum. The problem is that the US Federal Reserve will try to do the same. So it too is being forced to cut interest rates further because of the Chinese measures, so that the dollar weakens.
The world's top two economies have been locked in a trade war for more than a year. And this latest row over how China manages its currency has only made things worse. Laila Humairah, TRT World.
Well, let's get more on the story now with Martin Jacques in London. He's the author of the book When China Rules the World. He's also a senior fellow at Cambridge University and a visiting professor at Tsinghua University in Beijing. Welcome back to Money Talks, Martin. Now, we know that China has loosened its grip on its currency in recent years, but it still has ultimate control over the yuan. Do you think, therefore, China is a currency manipulator, as the US claims?
No, I don't. I mean, this was something that Trump was saying when he first came into office, and that they were accusing China of being a currency manipulator. I don't think that's true. I don't think China's really been a currency manipulator for quite a time. But certainly in the past, going back a few years, China did try and hold the value of its currency down in order to be a more competitive exporter. But this time, but why has China done it? I mean, China is under the Chinese economy is under a certain amount of pressure because of the trade war, and it was finding that pressure being on its currency, and it was trying to hold the value. It's been trying to hold the value of its currency. In fact, it's been invested quite a bit. Quite a lot of RMB in trying to hold the exchange rate, but eventually, it's seen that it needs to do what is a very small and gentle devaluation. So I don't think it's something to get hot under the collar about, but of course Trump does get hot under the collar.
It wasn't only Donald Trump who was a bit scared about it, though. We saw global financial markets embark on a bit of a sell-off on Monday when it did fall below that $7 mark. Do you think then it was a bit of a scare tactic on Beijing's part, perhaps reminding the world what it could do with its currency?
No, I think it did it for fundamentally for the purposes of the Chinese economy. I mean, actually, the Chinese economy is weathering the trade war so far, basically, very well. But there is a pressure involved in it. I think the trade-off, the sell-off, is more anticipating where this trade war between China and the United States is going to go and what its impact is going to be on the global economy. And quite rightly, I think many have drawn the conclusion that, first of all, there is going to be no early settlement to this trade war. In fact, it might go on for a long time. And this is going to have a deleterious effect on the global economy, which is true.
Yes, and Donald Trump is blaming these stalled negotiations on China, saying that it's Beijing who's in fact dragging its feet on negotiations because Donald Trump thinks that perhaps the leaders there want to wait it out until after the presidential election in the US next year to see if Donald Trump will stay in power. Do you think there's any truth to that?
Well, I think that I think probably the Americans are concerned that the impact so far of the tariff measures have not been that consequential for the Chinese economy. I mean, it's doing well under the circumstances. And so they're applying further and further pressure, as we've seen with the latest escalation from Trump, which will apply next month. So I think there's a concern on the Americans' part that the strategy is not working so well. And of course, they've just, they've reduced their interest rates because there's a concern the American economy is slowing down. That sort of a Trump bounce after the tax cuts has more or less gone and will have gone by, I think, next year. And so there's a buildup of concern, I suppose, in America, in the Trump administration about what's going to happen to the American economy over the next year or so leading up to the presidential election.
Okay, and we do understand that the US and China are going to meet again in September to discuss their trade war. We'll see how they go. Martin Jacques, thank you so much again for your time.